I am Labdi Mehta, and along with me is Harsh Shah, and we, on the behalf of the Students' Forum under the aegis of the Human Resource Development Committee of the Bombay Chartered Accountant Society, is pleased to welcome you all CA students to the training session for the changes in income tax forums and corresponding amendments in Income Tax Act for the individuals and HUFs for the assessment year 2022 and 23. Now I'd like Utsav Shah sir to speak.
I'll just give you a brief introduction of what HRD committee does and what does Students Forum do at BCAS. The HRD is one of the more very important committee of the BCAS, and Students Forum. The core objective of this entire forum is to have holistic development of CA students, both in terms of academics as well as non-academic sector. So we have series of events for students wherein students can participate, students can lead. They can lead in terms of taking a study circle or the topic which they like. Apart from academic events, we have several non-academic events like Tarang, treks, industrial visit, etc. And would like majority of you to join this students activity in large number. Back to Labdi Mehta.
So the today's session is going to be taken by CA Priyanshu Shah. I'll just quickly introduce him to you all. Chartered accountant by profession, Mr. Priyanshu Shah is specialized in statutory audit of listed and unlisted companies and taxation. He is also involved in implementation of Ind AS of NBFC companies. Apart from being a good professional, he is also an active committee member of the Bombay Chartered Accountant Society from the past 5 years. He was previously a student committee member of BCAS since 2018, and since then he's one of the active member of Tarang family, which is organized by BCAS every year. He has also involved in many social activities since his college times. Being a student of NL College, he was a part of NCARE unit, which carries out the activities of helping the poor and needy people and providing them food and necessary stuff. Also being active in co-curricular activities, his area of interest is in different dance forms, and he himself is great Garba enthusiast. So now, Priyanshu sir, take over.
Thank you, Labdi, for such a wonderful introduction. I'm sharing my screen. Just let me know, is it visible? Is it visible?
Yes.
As well as audible, don't create any sound in my back now.
Perfectly fine.
Okay, okay.
And all the question and answers would be taken at the end, right?
Yes, at the end.
Yeah.
Thank you so much. So without wasting much of time, I'm directly starting with my session. Before starting the session, I will like to go through the entire flow, how the session would be. Initially would be the whom to file the return, किसको return file करना है. Second area would be which form you need to file. Third would be rate, but I'm not going much deeper into the rate section, as it is the all as good as same as the previous year, as I'm not going in much on a rate wala part. And now fourth would be the what are the changes in the relevant ITR 1, 2, 3, and 4. Along with that changes, I am also covering the amendment with respect to maybe assessment at 22, 23, or maybe it will be amended by finance at maybe 19, maybe 20, maybe 21, and maybe a 22. This is how the entire flow would be. So along with the amendments, along with the relevant notifications or circulars, and along with the screenshot of what are the major changes which is happening in the current income tax form, I will be covering this. So direct, my first slide would be, wait a second. To whom income tax need to be filed. First of thing, initially before 2 years, if I remember, income tax return would be filed only for the individual whose gross total income is more than 2,50,000. That is a basic exemption limit. This gross total income doesn't consider your ATC or deduction wala part. That is chapter 6 ka deduction wala part. So before considering that, if your gross total income is more than basic exemption limit, then only you need to file your return, as it is not compulsory for the individual cases. But after, just before the 2 years, the major amendment has been come, wherein they have prescribed the various conditions in which, even irrespective of the fact that whether your income is above basic exemption limit or not, you need compulsory, you need to file your return. The first condition would be if SSC is deposited more than 1 crore in a one or more current bank account. मतलब उसने करंट बैंक अकाउंट में 1 करोड़ से ज्यादा कैश डिपॉजिट किया है, then it is compulsory that that person need to file their income tax return. It is irrespective of the fact that his income is above basic exemption limit or not. Second condition would be if the aggregate amount in the entire financial year expenditure incurred for more than 2 lakh in either for himself, either for any other person to foreign country, then also you need to compulsory file their return. Or third option would be he has incurred an aggregate expenditure of more than 1 lakh rupees for electricity bill expenses. Then also it is compulsory for that person to file their return. Fourth condition would be if he is doing a business or doing any profession, then if in the case of business, if it's a total sales or turnover or a gross receipt in the entire financial year is exceeding 60 lakh rupees during the preceding year, then it is a compulsory for that person to file their return. Next condition will be in case of a profession. If his income more than his income, or I can say a gross receipts more than 10 lakh rupees during the previous financial year, then it is compulsory for them to file their return. And in case of if in case of an individual whose TDS or TCS has been deducted by a company or an individual, that TDS amount is more than 25,000 rupees, then that person compulsory needs to file the return. And last condition would be if in the entire financial year deposit in their saving bank account is more than 50 lakhs rupees, then compulsory that person need to file the return. Please emphasis in the last point I have mentioned in the saving bank account number, for that limit is 50 lakh rupees, and in the previous slide I have mentioned the current account number wherein the limit is 1 crore rupees. So if any of the condition has been satisfied by the individual person, then that person is compulsory need to file the return, irrespective of the fact that his basic exemption, his income is below basic exemption limit or not. If you see the current income tax form as well, initially there is no specific criteria why you are filing the return. But if you refer the current income tax return form, wherein they have mentioned all these are various conditions why you are filing this return. Most of the client may not be ready to specify that particular condition. We simply mention on the other column wala part wherein say we are just filing the return. So I request the article student or maybe a member who are or filing this particular return, please specify the why you are filing the return. It is very important indicator when you are filing the return. The next would be what are the various income tax forms that we need to file. In total, there are total 7 forms: ITR 1, 2, ITR 3, ITR 4, ITR 5, ITR 6, and ITR 7. One by one, I will give you a basic introduction to which individual what ITR needs to be compulsory. For ITR 1, it is for an individual, that is a resident and an ordinary resident, having income from salary, having income from house property, but the point is only one house property is covered under ITR 1. So thirdly, if he has any interest income or maybe income from any other sources, all these are the form of income will be covered under ITR 1. And make sure that the total income, considering all these three head of income, if income is above 50 lakh rupees, then ITR 1 is not applicable to that particular SSC. Then he need to refer maybe ITR 2 or maybe ITR 3. And but there are certain exceptions to the ITR 1 if that particular person having a shares of an unlisted company, or he is a director of any particular company, or in case where that particular person TDS has been deducted under section 194N. In that particular situation, ITR 1 is not applicable to that particular SSC. What is the 194N? 194N is a section wherein if you withdraw cash from a particular commercial bank or a NBFC wherein amount withdrawal is necessary, giving a permitted by RBI bank in the entire financial year has been more than a specified limit, then 2% of that particular amount withdrawn has been deducted by that particular company, or maybe a banking company to be specific. This 2%, that limit would be if in the entire financial year your cash withdrawal is more than 1 crore rupees, then 2% rate of TDS will be applicable. And in case if you have the person who is withdrawing the cash is not filed their income tax return in last three financial year, in that case the limit of 1 crore would be reduced to limit of 20 lakh rupees. So that if in the entire financial year cash withdrawal is more than 20 lakh rupees and that particular fellow has not filed their income tax return, then TDS rate would be 2% and limit for that is 20 lakh rupees. And for other than person, it means the person who has already filed their return, for that limit is rupees 1 crore rupees. And the fourth condition would be the income tax has been deferred on a ESOP basis. This is a amendment which is introduced by Finance Act 2019. Detailed part of that ESOP particular session I will be covering in the next particular set, so that it will be better for you to the understanding for the people. Then your ITR 2, this is only for individual and HUF and not carrying for the business and profession. It means if you are carrying if you have any income from business and profession, then ITR 2 would be not applicable to you. ITR 3 would be if you have any income from business and profession other than the income wherein you declare your income under a presumptive section. And ITR 4 would be in case of individual HUF other than LLP, wherein your total income will not be more than 50 lakh rupees, and this form is specifically wherein you disclose your income by way of a presumptive mode. That is a 44AD, and 44AD is for professional, and 44AE and various other sections wherein income has been taxed under a presumptive basis. Again, there is a 3 exception to this form. First would be if you are a director in a company, then no need to file a form ITR 4, then you can go for ITR 3. If you are again invested in an unlisted company, and again a third option would be income tax paid on a deferred basis on ESOP basis. That again as I said, I would be covering in a different slide. In case ITR 4 is for other than individual HUF company and firm, so indirectly it is covering a LLP. So if you are a LLP, then ITR 5 would be applicable to you. ITR 6 is for companies, that is a private limited companies, and all are limited as well as private limited companies. And your ITR 7 would be in case of a trust or education institution or a hospital, wherein ITR 7 would be applicable. As I said, I'm not going into much deeper into a rate wala part, as the rate of income tax has not been changed as compared to previous year. So I'm not going through much detail in the rate wala session. Now I will be covering the entire what are the relevant changes in the ITR form. Along with that relevant notification or maybe a relevant amendment in that particular section, I will be covering. The first would be the dividend income. As you know that in the dividend wala session, where they have put a specific name wherein if you are earning a deemed dividend in a particular financial year, then you need to disclose the deemed dividend. What do you mean by the dividend? In a simple word, if you are earning any income from that particular company, from the profit of that particular company, if you are a shareholder, and if you are earning income from that particular company's profit mein se, then that income is called as a dividend income. Then what is a deemed dividend? Deemed dividend means if you are a shareholder, a specified shareholder, wherein they mention one particular condition, wherein if you are a specified shareholder, and if you have received some amount of loan from that particular company or any asset from that particular company, that so that the amount of loan or the value of that particular asset would be considered as a deemed dividend for the company, and you need to report in the ITR. Before this financial year, before this assessment year, there is no specific requirement to report a deemed dividend for the company. But the major reason behind to introduce this disclosure part is if you major of the clients, or maybe from an article assistant or maybe a member while auditing the particular client, maybe they miss out this particular section के you need to also analyze कि यार मेरे को भी analyze करना है कि यार deemed dividend current year में हुआ है कि नहीं हुआ है, और majorly ये part miss ही होता है. So in order to the report this particular transaction, they was specifically made a disclosure wherein you need to report a deemed dividend in a particular ITR. And second major the changes with respect to dividend is, as you know, from last financial year, dividend has been taxable in the hands of investor and not in the hands of company. So before this financial year, dividend there is a concept tax called, one is a DDT, that is a dividend distribution tax, that need to be paid by a company which is distributed that dividend, and in the hand of shareholder the same dividend is been exempt. So what is done in the previous assessment year, that dividend distribution tax has been abolished, and the DDT and the dividend will be taxable in the hand of individual SSC. Correct. So what the major change in the dividend part is that they have put a ceiling limit on surcharge. Ceiling limit on surcharge they have kept as a 15%. If you know if in case of individual, surcharge will be if you have an income up to 50 lakh rupees, then you don't need to pay a surcharge. Second, if you have a income for more than 50 lakhs but up to 1 crore rupees, then you need to pay a surcharge at the rate of 10% of your tax. If you have a income more than 1 crore but less than 2 crore, in that case your surcharge limit would be surcharge rate would be 25%. And if you have a more than 5 crores income, then your surcharge would be 37%. So in this budget, the surcharge, they put a ceiling limit on the surcharge wherein a maximum surcharge would be 15%. These are the disclosure part wherein I have mentioned a screenshot wherein you need to mention a deemed dividend wala disclosures. And the ceiling limit I have discussed wherein they have put a ceiling limit on deemed dividend wala session. Again, they have put the disclosure on a maximum surcharge will be 15%. Then next section will be I will be covering is a senior citizen pension scheme. When in Finance Act 2020, wherein this amendment will be introduced, this amendment is with respect to a senior citizen, wherein if specified senior citizen person earning a specified income as per this section, then that particular senior citizen person no need to pay their income tax return. Then what this section is talk about? This section is if you are a resident person, his age is more than 75 years anytime during the previous year, and his income only consists of his pension income, which has been deposited in a specific bank account. That specific bank account also has been mentioned in the Act. And in the entire financial year, his income only consists of this dividend income and no other income has been received by that particular person. In that case, that particular senior citizen person has no need to file their income tax return, but he need to disclose all their details, such as in case he is receiving a various any other income in that particular financial year, then he need to disclose that particular income to the respective bank, and if bank feels that his income is liable to TDS, then that bank will deduct that TDS as per the applicable rate applicable to that particular person. Along with that, they have made a one disclosure part when you file your income tax return. And they have made one drop down list has been created wherein we need to mention if there is a central government pensioner, whether he is a state government pensioner. In case of public sector unit, he is earning a pension from any public sector unit, or in case of any other case. Before this financial year, all these are various drop down has been not mentioned. There is only 4 or 5 particular drop down wherein if you are a pensioner wala pehle drop down tha hi nahi, to be honest. Abhi in this financial year pension this drop down has been created. Now I will be covering a residential status. The changes with respect to residential status from 1/4/21 will be, initially there are only 2 checkbox wherein you need to report whether you are a resident or a not ordinary resident, and out of that 2 checkbox is available. One will be if you are in India for more than 182 days or more during the previous year. Second would be if you are in India more than 60 days in a previous financial year, and if you are staying in India more than 365 days in a preceding 4 financial year. Only this checkbox has been already there till the previous financial year. From 1/4/2021, again 2 more checkbox has been introduced. What are that? If you are a citizen in India who left in India for the purpose of employment or as a member of crew who were stayed in India 182 days or more during the previous year, or or stays in India 365 days or more in preceding 4 financial year. This checkbox has been newly introduced, and again a 4th checkbox has been newly introduced, which is if you are a citizen in India or a person of Indian origin who visit in India during the previous financial year and stays in India for 182 days or more during the previous financial year, and who stays in India 365 days or more preceding 4 financial year, or 120 days, or if you are staying in India 120 days or more during the previous financial year and 365 days or more in preceding 4 financial year, and if you have an income other than income from foreign source which is exceeding more than 15 lakh rupees, then you need to disclose that particular checkbox that in these 2 are the also condition I will be following. This is for resident and ordinary resident. And again, a second disclosure has been made wherein if you are a resident but not an ordinary resident. Before this financial year, only two checkboxes has been mentioned. That is, if you have a non-resident in India in 9 out of 10 preceding financial year, or you have been India for 729 days or less during the 7 preceding financial year. And these 2 new checkboxes will be if you are a citizen in India or a person of Indian origin who visits in India, visit for the first time in India, wherein your total income other than income from foreign asset is more than 15 lakh rupees, and you stays in India more than 120 days but less than 180 days, then you need to check, you need to mark this checkbox. And the 4th condition will be if you are a citizen in India, citizen of India having total income other than foreign income which is less than 15 lakh rupees during the previous year, and you are not liable to resident in any of the country, any of the territory, or any of the judicial dominions, then you need to check this particular box when you are filing of the return. These are the 2 new reporting requirements which has been introduced, which need to be pondered over when you are filing of return. Because when you file your income tax return as well as for NRI or maybe a resident but ordinary resident, somehow we are missing this particular criteria. When you discuss your client, that saying नहीं वो last year के लिए non resident था, वो 180 days के लिए दिखा है तो तू ये tick mark कर दे and you file just return. But you are not checking that particular requirement, or if you want to just verify, you can also check you can demand also a passport from your client wherein you particularly mention or work out this particular requirement and file this return and disclose this particular properly when you filing a return. Because on this basis, they are tracing a various transaction, whether you are associated with any foreign entity or you have any income from your foreign sources. That is the reason. This is the main disclosure you need to be before you filing a return. You need to mention and update properly. Then a special economic presence. These are the additional disclosure which you need to mention when you have a special economic presence. What is a special economic presence? In a simple word, in the today's environment, as you saw that major of that in the global technology environment, where more of the technology company has been moving on and growing faster as compared to other company, and entire business has been managed from maybe outside a country, or entire business has been maintained through online portal and various if you take an example of maybe a Facebook or maybe only a technology company wherein the entire business has been managed from outside India, and they don't have any single presence or single office maybe in India, and this is the way they are planning their entire tax planning. So in this particular, in order to consider that particular transaction, or in order to tax that particular income in the country in which that particular income is accrued or arise, in order to track all this transaction, they made up one specific disclosure when specific economic presence, wherein they says that if any non-resident earning had made any transaction with any Indian person, and the entire transaction may be related to purchase or maybe sale or maybe related to maybe or software or data, and entire aggregate payment for the entire financial is more than 2 crore rupees, then you need to disclose this particular transaction. That there is one particular disclosure I will be showing in the next slide, where you need to show that there is a significant economic presence of this particular entity, wherein you have paid the 2 crore, or you have paid a particular amount to that particular person, that you need to be disclosed. Or in case of systematic and continuous solicitation of data, or various online portals have been created, wherein they give you a lead, or maybe they give you a reference for doing a particular business, and there may be possibilities that the entire business has been managed from outside. In that particular case, the solicitation from that particular clients, or interaction with that particular person is more like 3 lakh user in India, and wherein entire business has been managed and operated through foreign entities, then you need to also disclose that the user base of India, the entire interaction with the individual Indian customer is more than 3 lakh users. Then also you need to report the data. Although this disclosure has been made, but somehow I found a very practical difficulties how that individual person will report, or how the auditor will verify this particular transaction. How he will verify 3 lakh user with so when you audit that particular client, or that when you tax audit, you need to go out of your box, other than financial, other than books of account, other than your tally or maybe your SAP. You need to go outside the box, wherein you need to understand that particular business model, how that particular business model is been working, whether is there any business connection in India, how the entire transaction, or even if in this case is a multinational company, then how the entire structuring will be done, how the business model is been operated, that you need to understand, and you need to check this particular thing, kitna user base hai pure India mein, how this particular transaction happened, then only you will be able to understand as well as report this particular thing correctly. These are the disclosure. I'm making a screenshot of that particular income tax form, wherein you need to disclose that particular income when correct. Again, new amendment with respect to taxability of interest on provident fund. Up till now, any income I will say specifically interest income, which is received from public provident fund, or I can say employee provident fund. The interest income which is received by SSC, or I can say individual, which is entirely exempt till now. But after this amendment, what they are saying, this your interest income over and above one specific limit will be taxable, and that they have mentioned this particular specific limit is only on contribution and not on interest. Simply, एक जो मैंने contribution किया, उसको मेरे को 2 पार्ट में डिवाइड करना है. One would be your taxable contribution, one will be your non-taxable contribution. On your non-taxable contribution, your interest will be exempt. On your taxable contribution, the interest amount which you earned will be taxable. So on that particular contribution, they are putting the ceiling limit. Correct, and they have not mentioned the ceiling limit for interest. Let's say if you are on an interest income of more than, let's say example, more than 100 rupees in a year, then over and above 100 rupees, your interest will be taxable. No, they are putting a ceiling limit on contribution and not on an interest amount. What that section says, if there is a one contribution is your employee provident fund contribution, wherein contribution will be made by both. One is from an employee side, second is one from an employer side, and third provident fund contribution will be your public provident fund, that is your PPF wala part, wherein the entire contribution will be from your end, it is from your pocket. Till now, whichever interest will be earning under both the provident fund, entire interest will be tax free. But what currently says, if your interest income accrued with respect to SSC, wherein your contribution is over 2,50,000 rupees, EPF provident के EPF के लिए मेरा contribution up to अगर 2.5 लाख तक रहेगा, तो on that 2,50,000 or whatever interest I will be earning, that entire interest will be tax free. Or in case of a public provident fund, if any interest income which I am receiving on a contribution of up to 50 lakh during the particular assessment year, on that particular contribution, wherein my contribution is less than 5 lakh rupees, the interest income which is I am receiving on that particular public provident fund, the entire interest will be tax free. They have made a rule 9D, wherein they give an entire structuring or a procedure wherein how you calculate that particular contribution income. Rather than going to the entire rule part, I will be explaining this the entire transaction with the help of example. Let's say as on 1/4/21, you have accumulated public provident fund in your account is, let's say, 20 lakh rupees. In the financial year 21-22, you made a contribution of 4 lakh rupees in your employee provident fund account. Assuming these are the combination of both from your employee side as well as from employer side. So in case of employee provident fund, your ceiling limit on provident fund is rupees 2,50,000, as I mentioned in the previous slide. So the 4 lakh will be divided into two parts. One is your 2,50,000 and second one is your 1,50,000. 2,50,000 will be considered as an exempt, and 1,50,000 will be considered as a taxable contribution, and 2,50,000 will be considered as a tax-free contribution. So if you refer this now you can correlate that particular example in this formula, wherein they are mentioned balance as on 31/3/21. In the current example, it is a 20 lakh rupees. Second, if there is a contribution within a threshold limit, I have made a contribution over and above threshold limit, that is a 4 lakh rupees. So 2,50,000 I will be considering in the non-taxable wala contribution part, and 1,50,000 wala contribution I will be considering the taxable contribution part. Plus the interest which is accrued on that particular component, that is your balance as on opening, plus current year contribution. Less in case if I have withdraw any particular amount from that particular fund, whatever amount is left on that particular, I will be earning my interest. If that particular interest which I am earning, if it fall within a non-taxable contribution, that is 20 lakh plus 2,50,000, which is 22,50,000. On that 50,000, whatever interest I am earning will be tax-free. On those balance contribution, that is 4 lakh minus 2,50,000, it is 1,50,000 contribution. On that particular contribution, the interest which I am earning, that particular interest will be considered as a taxable, and it will be taxable under the income from other sources. So, in order to make this working properly, we need to maintain, that employer need to maintain two different separate accounts, wherein one part will be considered as a taxable contribution, and second part will be considered as a non-taxable contribution. Again, a note, the whatever accumulated contribution which is outstanding as on 31st March 2021, any interest income which is received on that particular accumulation is entirely tax-free for future years also, until the entire contribution has not been withdrawn from that particular fund. Then next, these are the disclosure wherein I have shared a screenshot wherein you need to separately disclose what are the taxable interest component, non-taxable interest component as per section 1011 and as per section 1011. 1012. 1011 deal with your employee or PPF wala contribution, and 1011 will be considered in employee provident fund wala disclosures. Schedule FA. FA is this is one of the important disclosure as far as when you are file your return. Because when you have a high net worth individual or good client, wherein they have invested in they have a connection, or they have a good investment made in a foreign country. When you file that high net worth individual client, you need to make a one particular checklist. Okay, these are the things I need to ask, or I need to think before you're filing the return. To whom foreign asset need to be disclosed? It is applicable if you are a resident in India and not resident in India and holding a foreign assets. In a previous year, on previous year, I will be covering next 2 to 3 slides. There is some changes in this year also. I am a resident in India, required to furnish. Second will be, if you are a resident, then you need to disclose. You need to report this particular disclosure, and not applicable to non-resident or not ordinary resident. This details is need to be reported irrespective of fact that whether you are holding that particular asset. It may be a equity share, it may be a debt instrument, it may be a a movable property or non-movable property, or a movable property. Even if you are holding that particular asset, even for a single day, then also you need to report this particular disclosure. Further, if you have if you are earning a business income, wherein you report and you file your ITR3, wherein when you disclose the entire disclose the entire balance sheet. This balance sheet also, include your foreign asset as well as foreign equities and debt insurance, whatever asset which you are holding in foreign currency. Then also you need to report a fixed foreign asset card disclosure, irrespective of the fact that you mentioned that particular asset in your balance sheet also. Then also you need to report this particular disclosure. And the amount which you invested in a foreign country, always it may be in a a dollar or maybe in any convertible foreign currency. That conversion, when you file your return, you need to mention that particular asset in a Indian rupee, obviously. So what will be your conversion rate? It will be a telegraphic transfer buying rate of foreign currency, which is reported for report purpose, which need to be adopted from a RBI SBI ka website. I hope you are clear. This is a very important section wherein your disclosure is makes a very important one when you are filing your return. What are the details you need to mention when you need to mention for if you are having a foreign deposit account, a foreign custodian account, holding any equity share or any debt instrument or any insurance product or any annuity product. If you also have any financial interest, any entity which is outside the India, or whether you are directly or indirectly deriving some income from any outside the India, then also you need to report this particular transaction. Also, as I have already covered, whether it may be a movable property or immovable property, you need to report this particular assets in your income tax return. Very, very important when you file your return. Also, specifically for a high net worth individual, wherein they have a income, or they have a foreign asset outside the country. Up till now we have discussed this foreign assets wala session, or specific economic dominance wala disclosure. Thirdly, wherein residential status wala disclosure, wherein they demand the disclosure if you are not an ordinary resident or having an income wherein your income is up to 15 lakh without considering the foreign income. All these are indicate that the government try to pick, or I can say government try to cover all the SSC under radar, wherein they have an asset or they have an asset in their foreign currency. So entire transaction they are trying to capture under the when you are filing this particular return. There is one controversy. It won't be I won't consider it as a controversy, but when you disclose their foreign asset, they have mentioned a calendar year. If they have mentioned a accounting year. If you have a holding a foreign asset in a particular accounting period, relevant accounting period. As you know that Indian accounting period and a foreign accounting period both are totally different. Where your Indian accounting period is starting from April to March and your foreign accounting period is from April to December. So you, in order to align with that particular word, they have change the word that is for calendar. If I can if I can give you one example for the let's say I'm talking about the financial year 21-22, so that your relevant calendar year will be 1st January 2021 to 31st December 2021. And if you purchase any shares of a foreign company wherein your buying date is your January 21, then yes, you need to report in a financial year 21-22. If the date of purchase of that particular share is, let's say, January 22, and you are filing a return for the financial year 21-22, then you no need to disclose this particular share in a foreign asset card disclosure, and same will be disclosure in a next financial year, that is financial year 22-23, and not a financial year 21-22. The next slide will be wherein I will be covering what are the changes relevant to related to a capital gain. The details of immovable till the previous financial year, where you sold any particular immovable property, or I can just immovable property, or maybe your land or building. What you used to say, you mentioned a CS consideration, less expense related to transfer, and directly you have to mention a purchase price of that particular property, and you need to mention that particular in which particular financial year you bought that property. It's obvious that it will be that particular financial year is on or after 2001. But from the previous financial year, they made a specifically call add a one particular specifically column when you need to disclose the purchase price of that particular purchase price as well as purchase date of that particular asset. When you purchase that particular asset in let it be maybe 1981, 1985, or maybe or 2000 or whatever it would be. Why this disclosure or this column has been added? Because when you claim an exemption under section 54 or maybe claim an exemption under 54 EC, all are self-declaration section. Wherein your 54 EC says from the date of transfer within next 6 months you need to buy a 54 EC का bond. But who will analyze कि on कौन से date पे तूने sale किया है? Date transfer date कब था? Yeah, let's say if you're talking about a section 54 wherein they are saying that you need to buy a residential house property in next 2 years. How can I analyze that particular 2 years? For 2 years to be complete or that particular matching wala concept was not there. It will be entirely on a self-declaration basis, or maybe a department may get that particular information from a local authority or a stamp duty valuation authority, wherein they get the data that particular property or particular SSA bought or sold that particular property in this financial year or X financial year. In order to curb this transaction, or the entire disclosure has been maintained. This is a major disclosure they have put into it, because lot of litigations, lot of loopholes are there in particular section, wherein people are claiming section 54 or maybe are claiming a deduction under 54 EC without considering the actual facts. Till that it is a self-declaration basis. From now onwards, the entire details has been available with department. So it will be more difficult for an individual SEC. But the individual who are disclosing their return file, particular return properly, they don't have to consider, they don't have a much issue about it. I'm mentioning the screenshot wherein, if you watch, the date of purchase has been mentioned, and as well as date of sales has been mentioned when you file your return. Again, a second screenshot. This is a paper return, or I can say this is an online return, wherein you need to disclose, as well as they have also by default they have calculated whether this property has been considered as a long-term property or short-term property. As you mentioned, as mentioned in the screenshot, they have mentioned 6 July 2010 and the date of sale is 24 March 2022. Directly, a system has calculated 140 months and 90 days, which is indirectly a long-term capital. Further details of cost of improvement also you need to disclose. Up till now, you need to only mention index cost, total index cost. You need to only mention that particular property will and the property I have made. These are the cost of improvement in this particular year, and these are the directly my cost of improvement. And directly have to mention in my ITR. From now onwards, entire cost of improvement you need. Let's say you buy a property in 2001 and you made some renovation and made some major improvement in, let's say, 2005. Second improvement will be maybe 2011, and you sold this property in 2022. The entire breakup of cost of improvement you need to give. By 2005 में ये किया, 2015 में ये किया, या 2011 में मैंने वो किया. The entire disclosure you need to mention. These are the screenshot wherein cost of acquisition is your 20 lakh. Cost of improvement you need to mention 5 lakh मैंने 1920 में किया, or I can say 5 lakh मैंने 2021 में किया, and so on and so forth. The entire disclosure need to be, entire thing you need to disclose. Second chain with respect to capital gain, which is in case of a slum sale. What do you mean by slum sale? Simply, in a simple words, I sell the entire company or a part of a company, or I can say a particular segment of the company in a lump sum. पूरा का पूरा गुजराती में या अदर लैंग्वेज में बोले तो उजड़े में बेच दिया. Simply, एक कंपनी का एक asset. I have not valued the individual asset or individual asset का value, or maybe a very goodwill, or I have not calculated the entire specific thing. The entire transaction has been done in a consolidated manner. Up till Finance Act 2020, when you particularly refer a slum sale ka definition, they have used the word sale. Okay, if the entire consideration has been, entire segment has been sold to that particular SSC or that particular company, and they have not mentioned But in the Finance Act 2021, they have changed the word from sale and they have replaced the word sale with a transfer. So if you have a in transfer as per the section 2 subsection 47, wherein whether sales transferring or maybe with sale, without sale, with monetary concession, without monetary concession, entire transfer case will be covered. And in the financial again in the financial year 2021, they have changed the word, up till 50B, the valuation will be considered as a kind of normal valuation. The fair market value word has been introduced. Under the fair market valuation, what you need to add, it will include a book value of that particular non-capital asset plus fair market value of capital asset, which may be a security or architect's work or a securities listed, plus stamp duty value of in case of immovable property minus book value of liability. And second option would be if fair market value of a consideration received during the first case will be wherein no consideration will be received and the entire will be a barter transaction. Or in second one option wherein the transaction also including barter, there is some monetary consideration also be received. So your formula will be monetary consideration plus fair market value of non-monetary consideration determined as per applicable valuation rule or applicable valuation standard plus stamp duty value of that particular immovable property minus the applicable liability if that assessee particularly that was. So higher of that particular two will be considered as a full value of consideration in case of some lump sum. The simple in order to conclude the entire section, I am saying simply what fair market value को introduce किया है, full value of consideration को derive करने के लिए. इसके पहले there is no concept of fair market value. Although 11 UA is already been inserted, 4 to 5 years back, but they have not specifically included that fair market value concept in the when you valuing the slum sale. They have simply added the fair market value under the when you computer gain in case of slum sale. The disclosure has been made. The fair market value is for if there is a non-monetary consideration, second in case of a monetary consideration, and higher of the two will be considered as your full value of consideration. Deduction under section 80GA for a partners up till now 80GA deduction only in case of all SEC other than a person who has an income from business and profession. This deduction in respect of in case of donation has been made with respect to scientific research or in case of any rural development, because the scientific research or in case of rural development, all these are deduction also covered in your income from business and profession. Correct. So specifically, this deduction is not applicable to business and profession because the same deduction they are getting under section of PGBP. So both दोनों जगह पे deduction नहीं मिलना चाहिए. But what is in case of a partner, the whatever income which is derived, maybe in a form of salary or maybe in a form of profit, that particular income is also considered as the income from business and profession. But if they have that particular SAC have made any donation for a scientific research or a rural development, they are not getting this benefit of deduction under section 80GA. So in order to get this benefit, section has been amended, and they have also mentioned that this deduction is also applicable in case of income from business and profession, wherein the income is derived from a partnership fund. These are the disclosures that you need to disclose when you are filing a section 43B. Section 43B in simple words says you are allowed to get a deduction under this section, or indirectly say when you allow a deduction with respect to expenses on an interest payment only when you make a payment. On an accrual basis, that expenses is not allowed when you file your return. In the Finance Act 2019, they have used the word if any interest payment made to any NBFC, deposit taking NBFC or a systemically important non-deposit taking NBFC, then that interest paid to that particular NBFC also allowed covered under the 43B. तो simply कुछ NBFCs का नाम ऐड किया है and 43B का logic will remain the same. You can allow the reduction only on a payment basis and not on a accrual basis. Section 44 AD. As you know already in the previous budget, audit limit has been increased from 5 crore to 10 crore in case of a 44 AD wala client, subject to if you have a gross receipt, if I incur any expenditure or receive any income more than 5% of total cash receipt or a cash payment in the entire financial year, then also you need to do it irrespective of fact that whether your turnover is about 10 crore or not. But till the time, till the previous financial year, they have mentioned the word only cash. Cash ka 5%, cash ka 5%. But with Finance Act 2021, along with cash, they also used the word non-pay account pay check or a demand draft. Indirectly, all these are sections wherein to try to promote the more of a digital economy and digital transaction and a less of a cash transaction. और as good as नहीं करो तो ही अच्छा है cash में. जो भी करो cash में ही करो. This particular disclosure has been maintained. No turnover does not cover an non-account pay check or a demand draft. Section 54 BAC. What section does 54 BAC? Wherein they gave a. I think this section has been introduced in a previous financial year, wherein they gave a option to SSA, either he can opt for a new regime or he can opt for a old regime. That regime wala concept again I am dividing into two parts. One in case of a business entity or business SSA, wherein they have income derived from a business and profession, and one case of an individual other than a business SSA. That is a normal individual. If you are a business SSA and you opt this section, or you can say opt for a new regime, then you can't withdraw. एक बार मैंने ये ले लिया तो I can't withdraw in case of business SSA. In case of a non-business SSA, every year I need to select whether should I opt for a new scheme or should I continue with a new regime. And in order to whether I have to opt or I don't have to opt, you need to file a form 10 IC before filing of return, wherein you need to file it, wherein after filing of that particular form, you need to get one acknowledgement number. That acknowledgement number you need to mention when you are filing your return. Somehow these are the disclosure. These are the screenshot of a form wherein you need to mention whether you opt for a new scheme, and you have to mention your acknowledgement number. And if you have already opted in a previous financial year, and then you need to decide in the current financial year whether you need to continue with that new scheme. And if your answer of that particular is yes, then again you need to mention that particular acknowledgement number and a date of filing of that particular form, that is your I. Simply old scheme में जाना है कि new scheme में जाना है, that you need to decide. If you are going for a new scheme, you need to file form 10 IC. 10 IC का जो भी acknowledgement number आएगा, you need to mention when you are filing of return. Business वालों के लिए is only a one-time option, and other than business वालों के लिए, they have to decide whether you need to continue with this option or not. Section 115BAA and section 115BAB. I will not be going much deeper in this both particular section. I will be just briefing you what are these two sections is. Section 115BAA is in case of a domestic company, wherein tax rate will be 22% will be applicable. If that particular company is other than not fall under section 115BAA, then tax rate would be a 25%. In order to get a benefit under section 115BAA, they have put a various condition and restriction, wherein you will not able to get a deduction under a section, additional depreciation you won't get. Deduction under chapter 6A, wherein 80 IA, IB or various other deduction you are getting, your 80 JJAA or any allowances with respect to a scientific research or development. All these are deduction you won't get if you are opt for a 115BAA. But the benefit is you can get a concessional tax rate of 22%, wherein in your normal case, your concessional tax rate would be a 25%. This is a case of 115BAA. With respect to section 115BAB is only for a domestic manufacturing company. Make the difference, just check. BAA deal with only a domestic company, and BAB deal with a domestic or manufacturing company, wherein your tax rate will be 15%. In this domestic company, you need to be a manufacturing company. Again, you won't able to get a deduction under your chapter 6A, scientific research का deduction you will not get, additional depreciation you won't get. Further, the major disadvantages I can say for this both section is you won't get a carry forward loss from the year in which you are up for this particular session. तो जो भी मेरा accumulated loss रहेगा मेरे previous years का, I won't be able to carry forward in the future years. But the thing is, it is not compulsory you need to opt for this section in this particular financial year or maybe your next particular financial year. They have, as of now, they have not put any sunset clause on these two sections. So what I can say is simply you can set off your loss. Once you set off, once your loss has been absorbed, then after if you are falling under a particular condition or a restriction, you are satisfying all these conditions under these two sections, then you may opt for these two sections. Maybe a manufacturing company or maybe a domestic company. Again, in section 115 BAA, your in the normal case, your MAT rate will be 18.5%. In case of this section, your MAT will be on reduced rate. Or in case of 115 BAB, your MAT is not applicable at all. If you opt for a 115 BAB. These are the two options available for a domestic company. Whether they have to opt for this section or not, they need to decide before filing of their return. Again, a same issue. Once this option has been exercised, this cannot be reversed. Say the same. If if you are exercise this option, then you need to file a form 10 IB or ID, and accordingly your acknowledgement number you need to mention when you are filing of return. And again, next year, if you are continuing with the filing of return, again you need to mention this particular acknowledgement number when you are filing of return. Again, a disclosure changes of if any investment made in any unincorporated entity, then you need to disclose when you are filing of return the name of that particular entity, whether the entity is liable to audit or not. The entire disclosure is need to be maintained when you are filing of return. Again, a taxability of ESOP. Few changes has been made, in order to promote the Make in India initiative, or what I can say, in order to promote a startup. Till now, what is the taxability of ESOP? I will be explaining you with the help of example. Let's say Mr. X is an employee working in a company, a good startup company, wherein his performance is very good day by day. Company's turnover has been increasing. Companies are doing a well business in the last few years. Considering the performance of Mr. X, or I can say employee, companies giving a ESOP option, wherein value of that particular share is, let's say, rupees 100. Company says that particular employee, since you are associated with company for more than, let's say, 10 years, I am giving you a discount of a 10%. Okay, 91 mein, if you want to buy that particular share of this company, you can buy it at a 91 rupees. So 100 rupees ka shares tha, I get it at 91. So indirectly, I am getting a 9 rupees card discount. So my purchase price would be 91 rupees because that is the amount I am giving from my pocket. And that 9 rupees, that is 100 minus 91, that 9 rupees will be considered as a perquisite and will be considered the taxable in the hand of SSC as a form of a salary. The section 17 के अंदर वो perquisite के अंदर add हो जाएगा और it will be considered as an income from my salary. And this taxability arises on the date of allotment. जब भी ऑफर किया तब भी नहीं, on the date of allotment, income will be added in my salary part. When this particular share has been sold, maybe after 4 years or maybe 5 years or maybe 10 years, after this particular from the date of allotment, if this particular share has been sold to an outsider, let's say of 500 rupees, so your purchase cost will be not a 91 and it is 100 rupees. Why? Because 91 rupees is already has been paid when I purchase this particular share, and that 9 rupees wala part is already has been taxed as an income from salary. So again, this will form my part of a cost, and my cost will be 100 rupees and not a 91 rupees. Till this date, these are the taxability. So 9 rupees my income from salary, and once I get this particular share, or when I get that allotment from that particular company, when I sell this particular share at any price, my cost will be, my purchase price plus the any amount which has a tax as a perquisites. Then what is a deferment of ESOP? Deferment of ESOP only in case of an eligible startup, wherein they have given a specific definition of eligible startup. What is the eligible startup? Is a startup incorporated after 1st October 2016 is involved in a innovative product and a manufacturing or a technology involved company. Or its turnover is should not be more than a 25 crore till the year 2020, till the Finance Act 2020, and after that, that limit has been increased from 25 crore to 100 crore. And she also obtained a certificate from the Department of Intermediary Affairs, and all these are various conditions has been mentioned wherein it's considered as an eligible startup. And this deferment one option is only available to the eligible startup. So what are this particular deferment? As you know, in the example which I gave, wherein tax on 9 rupees will be paid in the year of allotment. जब भी मेरे को शेयर अलॉट हुआ तब भी वो 9 रुपए पे मेरा टैक्स लगा या तो मेरे को पे करना है वो 9 रुपए पे टैक्स. What is the period of deferment? If that particular company is a startup company, satisfy the condition which are mentioned in the section, then I can defer that particular tax which is on my perquisites to early of this following. What is the early of this following? Early of this 3 period. One is if I expiry of a 48 months from the end of a relevant assessment year in which ESOP has been allotted. Second is cessation of my employment. Or third will be when I sell my ESOP. Earliest will be considered as my point of taxation in case of my perquisites. तो जब भी मेरा इन्हीं अब तक पहले क्या होता था कि जब भी मेरा डेट ऑफ अलॉटमेंट आता था वही डेट पे I have to pay tax on my perquisite. But in case of eligible startup, that particular tax on perquisite has been deferred with the earliest of these 3 conditions. I think these are the welcome moves from a government, and wherein they promote the entire startup ecosystem, to explore the business. The entire table has been they have developed, wherein in which assessment year your shares will be allotted to particular year, or whether you sold if you have sold particular share in particular assessment year. If yes, then whether it is sold at a partially or it is sold as a fully. If you have second condition is cessation of employment. If you are ceased your employment, then in which particular date your employment has been ceased. On that basis, they have calculate. On that basis they have calculate the period of taxation and point of taxation. Entire whatever example I have with the entire disclosure you need to make. 100 रुपए कभी ऑफर किया था, 91 कभी मैंने पे किया, 9 रुपए पे कभी टैक्स आया, और कितने पीरियड का मेरे को डिफरमेंट है. The entire thing, each and every point series of transaction I need to disclose when I am filing my income tax return. 48 months of my entire disclosure has been made. What is my basic salary in case of section 72, or stock option has been obtained? What are the value of that particular stock option? Entire thing you need to disclose. This is basically a calculation part. What is the tax payable on salary income if excluding a ESOP? How should I calculate my salary? Because my salary is including basic and HRA wala part also include some other income also. So how that entire derivation would be? The derivation will be taxed on total income including ESOP. As if my income has been taxable fully, multiply by total income excluding ESOP divided by the total income including ESOP. Simply a proportion wala logic has been used when you derive your total income. And this is a calculation anyway, the automatic. You need to you need to fill up the entire details properly. That is your salary, that is your ESOP amount, this is your perquisites, and year in which you are getting, and entire disclosure enrollment, and their calculation will be automatic. Again, if you are sold any partial, then it need to be carried forward in that particular future year, and their disclosure is need to be made when you opt for this deferment wala ESOP. Few changes in ITR. They have put a sunset clause on section 80 IA or IB when deduction available with respect to telecommunication service or any cross-country transaction or multiplexes theater or various condition has been put. All these are they have put it a sunset clause, and they have tried to abolish this particular section once the period has been abolished. Separate disclosure with respect to 715 IC wherein any income which has been derived from a GDR, from a, that is your global depository receipt, and you need to separate disclosure has been made, which you need to disclose, when you file your return. Again, a few important amendment with respect to section 40A. What is section 40A? 14A. Till previous assessment there, 14A says that if you have any exempt income in a particular financial year, if you have any exempt income, in order to earn that exempt income, you made some expenditure in that particular financial year, then disallowances under section 14A will be acted on the income which is exempt and incurred expenditure in order to earn that particular exempt income. This disallowance is acted. But what various SSC, what they have done in that particular financial year, they don't have any exempt income in this particular financial year, but they incurred an expenditure in order to earn that particular income, but income has not been derived, but expenditure has been done. So what they are saying, they are allowing 100% of this particular expenditure by stating that कि भाई मेरा तो exempt income current year में है ही नहीं, तो why should I make a disallowances under section 14? Exempt income था, expenditure था exempt income के लिए, made a disallowances. Exempt income नहीं है, exempt income earn करने के लिए expenditure है, तो मैं expenditure को 100% allow कर रहा हूँ, disallowances नहीं attract करूँगा just by saying कि भाई I don't have exempt income. So I will not I will not fall under section 14 disallowances. And various litigation and decision has been whether both the sides has been one is in favor of other, various is in the SSC. By in Finance Act 2021, they have made an amendment wherein they say that the provision of this section will be applied and deemed to be applied irrespective of the fact that whether during the particular assessment or whether income has been arrived or accrued exempt income in that particular financial year, irrespective of fact. मतलब मेरा income है या नहीं है, उससे कोई फर्क नहीं पड़ता. If I made an expenditure in order to earn that particular exempt, disallowances under section 14 has been accepted. How disallowances will be calculated? Again, it is mentioned in a particular rule wherein you need to calculate the entire investment month-wise, and you need to do average, and whatever amount will become, it will be considered as a disallowances under section 14. Entire calculation mechanism has been prescribed in a particular rule. It is again this mechanism also has been changed from last 4 to 5 years. Before that, again some percentage has been you need to disallow some percentage of that particular investment. Just 4 to 5 years back, the entire calculation structure has also been amended. This is with respect to section 14. With respect to section 37, disallowances offences. Section 37 already has been talking. If you are incurred any expenditure which is an offence under any law, then the expenditure which is incurred with respect to that offences will not be allowed as a business expenses in that particular financial year. So what are these changes in offence? I can explain you with the help of an example. In a medical business, wherein various freebies, I can say a free dawai distributed to a various doctor, wherein a company is promoting that particular dawai or particular medicines. So you can sell that particular medicine, or you can prescribe that particular medicine to your customer. So when this freebies has been distributed to a doctor or a practitioner, the expenditure which is incurred in order to purchase or in order to produce this freebies is been considered as expenses. But what medical professionals, or I can say medical practitioner association says, all these kind of activities has been prohibited under a medical association rule. So this prohibition is only applicable to a doctor, because medical association is made for a doctor and entire doctor community. So what the pharma company used to do, they take advantages by saying that these are the disallowances or these are the offences under a medical practitioner act, which is applicable to a particular doctor and not a pharma company. So that which are the freebies which has been distributed and which is not allowed under a particular association act, that is not applicable to pharma company, because we are not a doctor, we are ultimately a company, or we are doing this particular business. So we are not concerned with this particular association rules or its governance or is a code of ethics. So we are taking advantage of this particular section and claiming the expenditure under this head. By amending this act, by amending disallowances under the offenses, they have mentioned the offense under any act. मतलब irrespective of the fact that pharma company को वो मेडिकल प्रैक्टिशनर वाला एसोसिएशन का जो भी रूल्स और व्हाटएवर कोड ऑफ एथिक्स हैव बीन मेंशन इन दैट पर्टिकुलर association rules is also been applicable to pharma company as well as doctor. So the expenditure which are incurred on a freebies will from now onward it will be a disallowed. It will be disallowed. And third section would be 79. Set of again undisclosed income. If there is any source either it has been happening in your premises where undisclosed income has been identified and same has been reported when you report in a particular financial year, then set off against obviously not set off will be available against this assessment as well as additional depreciation also would be allowable under this particular it's a obvious section. Section 44I, deductibility of cess. Under as you know that when you incur expenditure, no tax expenses will be allowed as expenses. Tax means if I made a self-assessment tax of let's say 10,000 rupees, it won't be considered as my expenses. That is a tax you never will be considered as expenses. But there is a litigation with respect to whether cess would fall under a definition of tax or not. So various litigation has been going on with respect to various high courts, Supreme Courts, and various decision has been made. Various is in favor of SSC, various is in against the SSC, and finally they have concluded that cess will not be considered as expenses. But the issue is, they have created a mockery, or what I can say, they made this applicable from 1/4/2005. Retrospective amendment कर दिया. So indirectly, whichever company or whichever SSC who have claimed the cess as an expenses, let's say in assessment at 7-8, then entire expenditure with respect to cess will be disallowed. And then you need to pay tax on the disallowed income. Along with that, they are also saying it will be considered as an underreporting of income, and you need to also pay a penalty on that underreporting of income. How this practically work, I don't know, because backdated एक तो amend कर दिया, उसमें under reporting किया, again I need to pay tax on that under reported income along with applicable interest from that particular assessment till now, and also they are saying you need to pay a penalty under section 270 by considering this is under reporting of income. How this will be considered, I don't know, because under reporting under section 270 is introduced I think in 2017. This section is come already in 2017 or something. So how this will work out would be practically would be challenge, or I might be doubt on this section again there is a one litigation maybe arise, or they have to come up with some clarification or maybe some amendment with respect to this process. Some miscellaneous provision now, COVID related benefit. If any medical treatment has been on, if any expenditure incurred on medical treatment and the expenditure which has been incurred, which is received by an employee from their employer, then entire money which is received with respect to medical treatment, it won't be considered as a perquisite or anything. It won't be considered as a taxable income. This is not only covering as a particular employee, also covers a family, and the entire definition has been given of what is covered under a family, what is not covered under a family, and you need to mention a particular, you need to disclose, you need to give a disclosure with whether what are the expenses you need to disclose a particular base. These are the expenses which has been incurred and same has been reimbursed from it. And in case of demises, if any money received within a 12 months of the demises of that particular member and same is money is received from an employer, then no limit has been prescribed, or in case of any other person, then a limit has been prescribed to maximum to 10 lakh. So COVID related benefit has been given in this particular section. And some of the small amendment which is with respect to assessment at 21-22, wherein 43 safe harbor limit has been increased from 5% to 10%. With respect to 24C, advance checks installment for a dividend income also need to be covered under section 234 EC, 234C. 43 payment In case of employee and employer contribution, there are various litigation with respect to this section. Wherein whether need to follow income tax, whether the employee contribution has been paid before a due date of filing of return, or whether it is covered under a due date of filing that particular section, that particular ECA return. Amendment has been made wherein they specifically mentioned that in case of employee contribution, PF ECA due date you need to consider, not the income tax ECA due date. As I already discussed, lump sum definition is being changed, and they have mentioned the word transfer other and removing the word the sale. In the case of section 32, again, no depreciation on goodwill. Smith security case law, wherein they are allowing a depreciation, or they are allowing a depreciation on goodwill. Same has been abolished, and no depreciation will be allowed in case of goodwill. 44 ADA will not be applicable to LLP as a presumptive income. And 44 AD, as already discussed, tax audit limit has been increased from 5 crore to 10 crore. And again, a small benefit given to a small buyer, home buyer, wherein 80 double EA limit time limit has been expanded to 31st March 2021. But the major benefit under this section will be practically difficult, wherein they have mentioned you need to, it should be on the first house, or stamp value of such residential house property should not be more than 45 lakh rupees. And SSA does not also hold any residential property in a previous financial year, and a maximum deduction under this section you will get is up to 1 lakh or 50 lakh, 1.5 lakh rupees over and about your 24B wala part. I said it won't create any significant impact, but yes, if someone is getting, then better for them. So thank you. I'm done with my presentation. Harsh?
Yes, Priyanshu, we can start Q&A session. I think
Yes.
there are some questions into a chat box.
Okay.
Just a minute. So this conversation will manage our employer. If anybody is having any question, they can put it in chat box. Why there is question from Ratan Lal Prajapati, why we not treat as dividend to 9 rupees instead of salary? I don't know for which he has asked.
No, I understand 9 rupees. What can you explain again, Ganesh?
Why we not treat as dividend to 9 rupees instead of salary? I think this relates to one of the example.
Yeah, ESOP ka example, this 9 rupees is a part and parcel of your salary wala component. मतलब तेरे को वो indirectly you are getting this particular income in order to retain you in this particular income. Okay. And it won't be considered as a dividend income.
Okay. So dividend, there is question from Shruti. Dividend is out of company's profit. Thereby, that 100 minus 91 equal to 9 cannot be treated as dividend.
It's not a dividend. It will consider as a perquisite. And it will be considered
right. It will be considered as
a part of your salary.
Correct. Anything better from unable to mute. Okay. Yeah. There is a question from Gaurav Jetwa. A non-resident having PAN in India but no income in India, he incurs traveling expense outside India which exceeds the prescribed limit. Whether needs to file return in India?
No, because entire expenditure is been out of India, and as such there is no income accrued or arise in India. As you mentioned, there is no income in India, but an entire expenditure is
outside India. Okay. Anybody having any more questions? Again, people I will just put the WhatsApp link in a minute. You can just go through. Yeah, Harsh.
Yeah. Yes. So should I start with the vote of thanks now? Are we having
no? So there are more questions coming up. Let people have questions. If I have foreign asset in Thailand, the SBI TTBR is 0. How do I report it?
SBI TTBR is 0. you mention this particular asset wherein, let's say, XYZ asset, and disclose it as a zero, but at least you mention this K XYZ immovable property or whatever property name would be, and mention it as a zero. But before that, you make sure and confirm that TTBR is zero or not, because I doubt. But before filing, just confirm once.
Kusum, please share PPT in this group. We could download it. Yes, we will share the PPT in WhatsApp group itself, and we will mail it to you as well tomorrow. Okay. There is a question from Kunal. Can you elaborate on section 112A and its calculation?
112A.
Capital gain.
How it would be? The entire section is very big. In a summarized way, I can explain.
Yes, you can go in summarized way.
Simply, let's say if you have a long-term capital gain of, let's say, 2 lakh rupees. 112 is for long-term capital gain. And if you have a long-term capital gain of 2 lakh rupees, 1 lakh rupees will get a benefit. So that on that balance of 1 lakh rupees, you need to pay a tax at the flat rate of 10% plus applicable cess.
Okay, I think Kunal, your question is answered. If you have any specific question, Kunal, you can just raise the hand. I will let you speak. So directly you can elaborate. Instead of asking for complete section, you can ask whichever section you want to ask. I will just unmute you. Kunal Reshamwala. Yeah, till the Kunal speaks, there is another question from Vinayak. Hi, there is a doctor having gross receipts, say 10 lakhs, and the net profit is 4 lakhs. We are not opting for presumptive. Is it mandatory to show 50% profit? If we do not show, this tax audit is required.
How it would be? Because 50% is mandatory. As go for a tax audit.
Yeah, Harsh, can you just continue with question? I will just.
Sure. Did we answer Vinayak's question?
Which question is?
No, it's left.
Okay, Vinayak Singh is asking that there is a doctor having gross receipts of say 10 lakhs.
I said.
Okay. So let's take Sarah Bhati's question. If I am working out of India and I credited some amount of my salary in my Indian account for my family use, is it taxable?
If the same is taxable in that particular country, let's say or Mauritius or XY, let it be any country. If same is taxable in foreign country, again that won't be taxable in India. Well, in order to that particular understand that transaction, treaty would need to be understood. But
no, Sarah, if you're sending some money for the expenses to your family, it won't be taxable in India.
Yes.
That will be the gift from the relatives, and it won't be.
Yes.
There is a question from Parag. Yeah, continue.
Okay. So Parag is asking that, sir, how will the capital gains be treated if the gains is due to dissolution order passed by NCLT and the shareholder receives the shares in this assessment year after liquidation of the company?
You need to separately consult me because various litigations going on this year, and I'm working on this particular two cases with regard to this. So you need to specifically consult. Because various litigation has been going on this particular and there is no particular clarity. How can we move on with this with respect to this matter? And it will be a dicey situation. So opinion would be differ.
Okay, there is a question. Shyam has again repeated his question. There is a doctor having gross receipt of 10 lakhs and net profit is 4 lakhs. We are not opting for presumptive. Is it mandatory to show 50% profit? If we do not show, tax audit is required.
Yes, mandatory 50%.
Yes. Yeah, Shyam, that is mandatory because it's not in 44AA, but if you go to 44AD section, you will find it that it is, if you are not showing, even though if you are not going for presumptive, you will be applicable. Tax audit will be.
Yes.
There is a question from Pradeep. A person having a flat in a residential building which went to reconstruction, and by paying additional amount, he buys additional area in the said building in addition to the existing flat he has, for which part payment is made in financial year 21-22 and part payment in 22-23. Can I take 54F exemption in both the years if I am having LTCG capital gain on sale of shares?
54F is with respect to property. As far as my opinion, answer is yes. You can do.
Okay. There is a question from Chirag Shet. I am doing business and I have opened PPF account and I have received interest on PPF account at the year end. Then whether it is taxable or not.
See, your the amendment which is come from 1/4/21. Now is important to whether your what is your contribution amount is. If your contribution amount, let's say 1,50,000, which is a below 5 lakh, which has been mentioned in discussed in the presentation, then the entire amount or interest income which is earning that particular income is exempt. If your contribution is more than 5 lakh, then you need to distribute up to 5 lakh, more than 5 lakh. More than 5 lakh, interest will be taxable. Below 5 lakh, no interest will be taxable.
Yeah.
Priyanshu,
Bolo na.
just to add to this query, uh, uh, see, for the first year you take base as 20 lakh rupees. Assuming you contribute 5 lakh rupees and 2.5 lakh interest on 2.5 lakh would be taxable.
Yes.
Uh, th- for the second year, your capital base would be 25 lakh rupees. Now, interest on this 25 lakh would be exempt, or again you have to keep that 2.5 lakh rupee in mind and work ahead.
You need to separately, you need to make a two calculation. One is for taxable account, one is for non-taxable account. Every year on up to 20 lakh plus, let's say 20 lakh plus 2 lakh 50. And that particular income, you on an income of interest income of, let's say 1 lakh rupees. So your base would be 20 plus 2 lakh 50 plus 1 lakh. 23 lakh 50. So next year you will earning an interest of 2350 plus that year ka contribution. So that will be on and on. So that particular account is separate. That is a non-taxable interest. And taxable interest will be that 1.5 lakh wala part. That particular interest is been continue on and on. 1 lakh 50 plus interest and go on.
Yeah, so please stay online. There is question from Swati. Sir, ITRU being filed for financial year 2021, whether the assessee has no tax liability. What will be the late fees under section 234F? The Excel utility auto-populates the late fee as rupees 5,000. But as per section 234F, if there is no tax liability, then fees should be restricted to 1,000. Is there any amendment under section 234F for the assessee for the updated return filing?
Updated data, I think you won't fall in you don't need to file a late fees, as far as my understanding is, because 139(8) has been introduced for this only. You don't, although you don't have any income and also you don't have any refund, I think so. Correct? वही है ना, खाली no income है ना उनका.
Yes. There is Sandhya. Yeah, can ITRU be filed if income is below exemption level? Yes. ITRU can be filed.
Yes, you can.
Yes. Sham Shankar, I will just again your request for replying to your query again. I will just reply to your query in a few minutes. Pradeep saying, because the said building is in reconstruction and thus the CAGS will come into picture. I think that is in continuation to the reconstruction wala 234F question.
नहीं समझा नहीं मेरे को question.
No, the question was earlier that the person has having a residential flat and the property has been into reconstruction. Now he has paid additional amount for additional area in 2 assessment years. Now whether that can be claimed under section 254F, sorry, exemption under 54F.
I have said
yes, no, he has added the question because whether capital gain account scheme, you can put money in that account or not.
Yes. Capital gain account is also applicable to 54, also applicable to 54F also. It's a normal.
Yes, PPT will be shared in WhatsApp group.
But make sure that capital gain is on in case of immovable property, then there is a concept of capital gain account scheme. In case of sale of share, there is no concept of capital gain account scheme.
Priyanshu would also request you to specify your email ID before you the final PPT, so that if anyone has any specific query, it would be easy for them.
Yes. I am sending in my chat box.
Yes.
Yeah, Harsh, you can just take over.
Yeah, sure. So there is this question by Sumedha Upadhyay. The PF question earlier asked, she is adding that, but this year PF interest is taxable or not financial year mein 21-22.
21,
We have to
22.
calculate manually, kya? She's asking we have to calculate it manually.
No, as far as my understanding is concerned, whatever a consultant will be, in case of EPF, it will be consultant. In case of PF, bank need to make a separate account because individually how we can distribute or how we can do a particular working. Some of the certificate or some kind of practical implication would be there. Otherwise, manually it won't possible. Initially, 1 or 2 it will be okay, but after 4 to 5 years, it will be difficult to catch.
Okay. So there is JJ asking that how can it be possible that we can take the set off of part payment in different years?
Of that, suppose 10 lakh in every year. Every year I am having a long-term liquidity on 790. It will be allowed under as far as my understanding is concerned, you can, because I have done it for one particular client. Hence, I am saying this loud. I have planned this particular transaction.
Okay. Swati is also asking that income is there, but it is within 5 lakh limit. Then will ITR-U be required to be filed?
Right. Income is below 5 lakh limit. Yes.
Within 5 lakh, yeah.
Yeah.
So it is required to be filed, right?
Before your income is above gross total income, na GTI se income zyada hai na. Simple, you need to file.
Kusum asks that it appears that TDS under section 194A is not being deducted. Under what section?
Under what section? For what?
Yeah, forward. She has not completed her question. Sumita is asking, so we need to check PF account of client.
PF
Yes.
account of client. Yes. Some report it needs to be shared. Only on that basis you are able to done it. Otherwise, it won't be possible.
Under Chirag Shet is asking under which head speculation income is taxable.
Separate head is speculation head करके एक अलग से है. Income from speculative business.
Kusum, please elaborate your question properly.
Kusum is trying to ask that if that interest is taxable, will bank deduct TDS under section 194A on the PF interest, which is taxable?
Amendment is under when amendment has been changed with PF, there is no amendment in section 194A. But practically, if interest income is below 10, then they need to.
I think we had enough of questions, and if there are any specific queries, Priyanshu is always reachable.
Yes.
And may I request Harsh to propose a vote of thanks to
Yeah,
Priyanshu.
well-deserved vote of thanks.
Sure. So thank you everyone. Top of the evening to one and all and present here. I, Harsha, consider it a great honor to be presenting the vote of thanks for today's webinar in the presence of our esteemed speaker, CA Priyanshu Shah. I am certain that all the knowledge and tips he has provided us with will be useful to us in the near future. Thank you, Priyanshu sir, for taking out the time to talk to us, share your experience, and being a guide through this webinar. Last but not the least, I would like to thank our student participants, BCAS staff, and student committee for conducting such a hassle-free and interactive seminar and providing us with the opportunity to learn from the best around us. So signing off and have a great evening ahead. Thank you, everyone.
Thank you so much.
Thank you, guys. Thank you, Priyanshu.
Yes.